Hello, my name's Harriet. I've been part of the commercial property world now for nearly 30 years. A lot of that time as a commercial property solicitor. And what we all find is finding the deal. That's the exciting part. We all run around, we get our builders, we work out our strategies, but at that point we have to find the funding. So let's talk about how we're going to get that funding. Two ways I'm going to talk about. First, commercial property and angels. When we're looking at angel finance and we're buying a commercial property, we're going to have multiple exit strategies on that commercial property, which gives us multiple ways to repay or work with our angels. How are you going to do that? You're going to sit down with them, with the deal, pen and paper, draw out the property and say, what do you want? Do they want to lend you the money for a short period of time and then get the lump sum cash back? In which case, part of that commercial deal, part of the structuring, we need to get a bit of flipping in there. For example, maybe one of the apartments, get them paid back. Other angels might want to say, no, I'll leave my money with you 3, 4, 5 years. They're going to need regular cash flow monthly. So we're going to build into that deal, build into the structuring. Is there a unit in there, whether it's a commercial retail unit, a light industrial unit, or maybe even apartment, serviced accommodation, that would generate enough cash flow to repay the angel every month? And then the rest of the units in the development, then that's ours. So think about how creative you can be and talk with your angel. Next thing we're going to have a look at is how do we get funding from the bank? And I specifically said there, get funding from the bank, because we have to put ourselves in the shoes of the bank and what they want. And they're going to look at this property, not at us, the property, from a risks perspective. So what are they looking for? They're looking at the price you paid, the done up value, the location. If our location is a little bit not brilliant, but we're confident, we can prove we can get tenants, then they're going to look after us, but we have to accept it might be a higher interest rate. That's okay, as long as they'll lend to us. They're also going to look at the tenant type. If you let somebody in, don't give them a proper lease, they've just set up the company, really, the bank's not going to be very keen. But you've got a local company, got 2 or 3 years trading accounts, you've set them up on a full lease, bingo, lower interest rates, higher loan to values. So it's all looking from the bank's perspective and a risk perspective. So how do we do that? We talk to our mortgage broker and our banks at the time we are buying the property, and again we structure the deal to what works for the banks. And if ultimately we have a slightly higher interest rate, no problem, we just work that out in our cash flow when we're working out our price. So I hope that's helped you have a few more ideas about how you're going to fund your deals.
Some great investment knowledge there, and for more knowledge, click the links you see on the screen right now.